Good afternoon. It is March 12th, and today saw a general sell off again. The market that was about to turn when the government came out and they proclaimed they were going to have some helicopter money and everything was going to be okay. But then after that, the market turned and actually had the worst close yet. So the thing that bothers me about this is I was an advisor in 2007 to 2009. And the things that are happening now are very similar to what happened in that time period. And the thing that started bothering me today, and actually for the last couple of days, is the bonds. So today, the BND was down almost 5%, or actually 5.41%. And the AGG was down a lot more worse, but it's coming back for the afternoon. It was down 1.46%. So there's something going on where people are having to sell stuff. Generally, the bond funds, go up because that's where people go to hide. But in 2007, that period, everything went down. So there was no place to run, no place to hide. And that's pretty much happening again. So if you look over here where the 52-week range, and see, I'm actually in cash. I went in cash about 4 days ago because I couldn't find anything to buy, and I didn't see any upside in this market at all. And I keep a watch list of things I do want to buy because sitting in cash is not a really great thing, but sometimes it's a lot better not to lose than it is to make money. And I think that's kind of where we are now. But you see, there's nothing but red. So let's take a look at the entire market. These are the indices. Red, red, red. That means they're all at their 52-week low. Sectors. Now this is the rest of the market. This is energy. All of the sectors, all red except technology, and they're on their way. And even utilities, which is really unusual. That usually people buy utilities in times like this, but not now. So this is what I find really kind of disconcerting. Now here we go again. These are ETFs. There's alternative allocation funds, Canadian commodities, internet, municipal bond. Now the municipal bond funds are at a 52-week low. That is really amazing. And then there's taxable bond funds, which are close to that. So, and U.S. equity is trash. That's no huge surprise. So, I think this market is very dangerous, and sitting in cash I don't think is a bad thing. Everywhere I read that, oh man, you gotta, stay the course, buy the dip. And I think buying a dip was what happened like 6 months ago when there was a bunch of foreign money coming in because there's no place else to go. And every time the market would dip, they would be at the close, they'd buy the dip and more money would come in the market. What I think is happening now, that money that came in from overseas is now leaving. So you look at the close and it's actually dipping at the close. So we no longer have that luster of the greatest place to invest because of what's going on with this coronavirus and the lack of anybody knowing what's going on with it. So people are, leaving. So let's look at, this is my watch list. Closed-end funds, all red, except this one down here, which is really close to it. Now they're closed in. This is my watch list, all 52-week lows. This is a total return, which I've had. This is an older portfolio, but it's got MLPs, it's got preferreds in it, and it is everything, all red. Total return 50K, all red except for the hedge, which that's the only position I have now, VXX. BDCs, business development companies, all red. REITs. Now, REITs are supposed to be good in market downturns. This is yet another portfolio that was doing really well. It's trashed, all red. MLPs, trashed, all red. So international funds, all red. So the thing is, this has been a general sell-off. People really don't care. They just want out. And I think, eventually we're going to have what's called capitulation, where all the people that are going to sell have sold. So I don't know when that's going to be, because I don't know how much of the market was composed of people from, Europe and the rest of the world. So this is a portfolio I put my wife's 401k in. This is about as conservative as I could get. These are bond funds. There's AGG, BND, and it was down, and this is not going to be pretty. This is total market fund, but this is a 2050 retirement fund. So that's down. So the downside of a 401k is you can only go into bonds to protect yourself. And now that the bond funds are beginning to roll over, it's getting to be nerve-wracking and I think dangerous. So what I have, I'm gone. I mean, I'm out of this market, because if I could find a place to go that wouldn't go down, I'd probably be there. And I look very hard, and these are preferred stocks. I mean, preferred stocks normally are dead money, but they throw off a yield. But look, almost all of them are at 52-week lows. So to make a long story short, I see nothing good happening in this market, and there's no way I think I would buy anything at this point, because you don't know how much farther we have to go. And if you're in the market, this market is not making little moves. It's making 10% moves a day, which is huge. So until you get some confirmation that we have had capitulation, which is going to be a massive sell-off, which could have been today, but who knows. And you get a few days of, you see a market turn, then, you stick your toe back in the market. But I'm not really sure, with all this unknown going on with the coronavirus, that it's going to be a V recovery like we're all so used to. It goes down, and then the next month we've got it all back. I don't think so this time, because there's too much unknown with the coronavirus and restricting travel, and now you can't go to a basketball game because there's too many people. So they're calling all this stuff off, which I think is just adding fuel to the fire. In my own opinion, I think we are way overreacting to the coronavirus. We lose more people with the flu, but unfortunately the politicians and the press have jumped on this, and it is what it is. So as for myself, I am not going to be in it. I'm going to sit on the sides and sidelines and watch this. So I hope this is informative for you. I would not recommend jumping in the market. I would not recommend buying these dips, because if you've been doing that in the last month, you've had death by 1,000 cuts, because you don't know what the dip is. The dips just keep getting deeper. So hang on to your money and wait for the market to turn, and don't expect the stocks that you had to be going back to the same place where you bought them. Usually after a downturn like this, there's a whole new group of stocks that are going to return, go up faster than what you had. So keep an open mind on your investing, because what was good may not be good going forward. So I hope this helps, and I hope it gets better, but I don't really care because I'm in cash. But have a good day, and thank you very much.